Hi, everyone. Welcome to our webinar today. We are very excited to have Dora Rankin from Honeycomb Credit with us today. Dora has a diverse background to include 2 decades in corporate lending, traditional finance, and she's currently Director of Partnerships and Market Activation for Honeycomb, which is a high-growth fintech startup. She's a natural-born leader with an entrepreneurial mindset, a lifetime of knowledge and experience helping business owners, and is dedicated to building a financial circular economy. Before I turn it over to Dora today, this is just a friendly reminder that if you have any questions, please go ahead and put them either in the question box or in the chat feature. We'll go ahead and read through them both. We'll do questions at the end, so we'll give you a little bit of time to think of a question, but if you have any questions, please feel free to put them in and we will collect them and ask them at the end. And you will get a copy of the slides on Monday. We will send out the recording if you want to rewatch it and get a copy of the slides. And with that, I will turn it over to you, Dora. Thank you.
Hi, good morning or afternoon, depending on what time zone everybody is in today. Thanks so much for having me. I'm very excited to jump in and share what crowdfunding is all about. It is definitely a new venture for so many people, but it is a way for you to unlock funding to start, scale, and grow your business. So let's see here. I'm going to just move that over to the side. Sorry, something you guys can't see. So my name's Dora Rankin. I'm the Director of Partnerships for Honeycomb Credit. As mentioned, I have a background in corporate finance as well as building a startup. So my passion and mission is to help small businesses unlock growth opportunities by growing those opportunities through their backyard. So we're going to talk about what that looks like. We are, as long as I can, there we go. So this is the crowdfunding masterclass. We're going to talk about the art and science of community capital and crowdfunding. What is crowdfunding? Crowdfunding is, as mentioned, it's going to unlock growth capital, drive local marketing strategies, and increase consumer engagement. In these 4 brief classes that we're going to talk about today, the first one is an introduction to crowdfunding. We're going to define what crowdfunding is and what are the different platforms for you as a business owner to choose from. We are also going to talk about what's called getting crowdfit. This is how to prepare for growth capital through crowdfunding, and we'll talk about that checklist of how to get qualified. We will then move into how to create your crowdfunding campaign, developing a crowdfunding marketing campaign, the different categories of contributors and how to tap into them. And then lastly, how to launch your campaign and go to market to raise capital. So first and foremost, we will talk about the different types of funding that are currently out there, what crowdfunding is, and then what the crowdfunding options are. Everyone knows that you go to the bank to get a loan, right? However, over the last 10 to 15 years, community banks, which are the banks that typically support small businesses, are consolidating rapidly, and our larger commercial banks don't really have the appetite to lend to small businesses. You know, I was an SBA lender for 23 years, and as an SBA lender, I always thought that all small businesses were able to unlock capital by just going to the bank and applying for an SBA loan. I have found post becoming a recovering banker that really is not the case. The average small business loan that is approved by the SBA is $400,000. So that is the average dollar amount that the SBA is approving. And that's pretty darn high. So what is happening with the folks that are looking for capital less than $400,000? Well, we'll talk about that. The second is venture capital. The statistics in 2020 basically state that $168 billion went to businesses through angel investors and through venture capital. Out of that $168 billion, only 4% of those dollars went to small businesses, into our Main Street small businesses. And even more important to know is that less than 2% of that $168 billion went to women and minority-owned businesses. So that's a problem, right? So where does that leave small businesses to get capital, to get funding? 65% of our small businesses fund through the support of family and friends. Or small businesses lean on online lenders. And online lenders, an example of an online lender is your point of sale, whoever you utilize for your point of sale. So Square, Cabbage, Amazon. And this is a really quick way to get access to capital, but it is also an expensive way to get access to capital. Another name for an online lender is a merchant cash advance. Merchant cash advances often charge exorbitant interest, up to 94% annual percentage rate, so interest, or they take an amount of your daily revenue that can cost an upwards of 300%. So these fees, they also include fees, prepayment penalties, and short-term repayments. So you really want to look at the fine print before hitting what I call hitting that green button to take on capital from some of these lenders. So what's crowdfunding? Crowdfunding is a method of raising capital through the collective effort of friends, family, customers, and individual investors. Crowdfunding actually opens the floodgates for everyday people to invest and support and contribute in everyday businesses. So just a little bit of regulation talk. Back in 2012, when the Jobs Act passed, what that did was open up the ability for non-accredited investors to invest in non-IPO'd businesses. Just to say that in everyday words, that regulation allows for everyday people like you and me to now invest in everyday businesses that we love. And prior to that regulation change, if you were a coffee shop or a barber shop or any independently owned business, and you were trying to get capital by investors, you had to take on an accredited investor, which means you had to give away a piece of your pie, a piece of your business in order to get capital the regulated way. So what this regulation opened up is for everyday people to now invest in businesses. It's really cool, and we'll talk about how it works. So there's a number of different types of crowdfunding. There's donation, equity, revenue share, and debt. Most people are familiar with donation and reward crowdfunding. This is GoFundMe, Kickstarter, Indiegogo. Those are a few examples of donation and rewards-based crowdfunding. Now, understand with donation and rewards-based crowdfunding, it is not a regulated platform. So anyone can go on Kickstarter, Indiegogo, and raise capital. Anyone. So the success rate for raising capital on a non-regulated donation-based crowdfunding platform is pretty low because anyone can go do it. So the success rate is about 25%. The industries, however, that do well on donation and rewards-based crowdfunding are the following: charitable organizations, startup businesses, creative design, authors, artists, independent movie publishers. Donation and rewards-based crowdfunding, the pros are anyone can raise capital, somewhat effective for startups, and it can prove your concept and help you gain marketing traction. The con is that there's a very low success rate in funding. It is not a regulated platform, so there's a lot of fraud, and it's very time consuming. The time it takes to raise capital on a Kickstarter, Indiegogo, you'd be looking at spending 20 to 30 hours a week of your time devoted to that campaign to ensure the success of the capital raise. The second type of crowdfunding is equity crowdfunding. Equity crowdfunding has about a 45% success rate. The industries that do well in equity crowdfunding are healthcare, technology, e-commerce, and breweries, alcohol distilleries that are looking for funding in a larger scale, about $1 million or more. So the pros for equity crowdfunding, the pros are the following. Any business that's looking for a larger raise, anywhere from 500 up to 5 million. With equity crowdfunding, as a business owner, you are raising capital through the crowd, but you are giving away equity to do that. So so when you think of equity crowdfunding, one of the things that you can think of is the show Shark Tank, because that's pretty much what's happening on that show, is that folks are contributing and investing in businesses in return for an ROI of equity. Another pro is that it's no repayment until the business is profitable, and equity can help you scale your business faster. The cons are you have loss of control and ownership of your company once you give away equity, especially over 20% equity. Those folks now become guarantors and financial decision makers for your business. It can be very expensive. This is something that you'll be paying back for the life of your business. It's not a term agreement. It is equity for the life of your business. And then just to be careful, not every investor is out there to look at your best interests. They are also out there looking to for a large ROI. So that's equity crowdfunding. Revenue share crowdfunding. We're not going to get too in depth in this because it can get a bit complex. But revenue share crowdfunding has about a 50% success rate. The industries that do well with revenue share are breweries, food and beverage, retailers, e-commerce, consumer goods, and technology. So an example of revenue share crowdfunding would be Mainvest is the one that comes to mind. And rather than paying back the crowd in a equity or a fixed payment or donation, you are paying back the crowd with revenue shares of your business. So if you take a look at this example here, say you raise $100,000, you're going to pay that $100,000 back to the folks that contribute to your campaign in revenue. So the example I have here is that you'd be paying back at a multiplier at 1.5 over a fixed period of time to the people that invested, and at the end you'd be paying with a 1.5 multiplier, $150,000. What's interesting and cool about revenue share crowdfunding is that it's you pay back in revenue, so your payments monthly are going to fluctuate. So if you have a really good month, say you're a brewery and you have a really good month and your sales are 10,000, then you're going to pay back that 1.5% of 10,000. But then if you have a not so good month and you only, it's $1,000 month, you're only paying 1.5 of that $1,000 month. One big thing to remember with revenue share crowdfunding is at the end of the term of your revenue share, if you still have a balance, so if you raise 100,000, you have to pay 150 by the end of the term. If you still have a balance, then you're going to have what's called a balloon payment and have to pay that full amount at the end of the term of your revenue share. Don't want to get too far into the weeds in this. I just want you to have an idea of what revenue share looks like. And then lastly, we have debt crowdfunding. So debt crowdfunding it's a loan, right? So there's two different debt crowdfunding platforms out there to choose from. The first is Kiva, which is our sister company, our meaning Honeycomb Credit. Kiva, you can raise up to $5,000 to $15,000, and you are going to pay this back directly to the crowd. What is really cool about Kiva is that it is global. So businesses that are outside of the United States can raise capital. Couple other things to know about Kiva is that they don't check your credit score and the interest rate is 0. So you're basically taking out a loan through the crowd and just paying back that same amount. And then Honeycomb Credit. So Honeycomb Credit, we're a debt crowdfunding, loan crowdfunding platform. Our success rate is 83%. Really excited to share that with you guys. And the industries that do really well with loan crowdfunding are food and beverage, restaurants, local retailers, alcohol establishments like brewery, wineries, distilleries, and then sustainable businesses like composting, farms, organic, fair traded. Now that doesn't mean that other industries will not be successful. These are just the ones that are within our sweet spot. So to give you a quick summary of the difference between donation, equity, revenue, and debt, just to give a quick breakdown, donation and reward, the capital need is usually under $25,000. Now, there's people that have raised $1 million through Kickstarter, but this is just a majority. The capital need is under $25,000. The industry, consumer or non-consumer facing, no need for investors. So you don't need to have a network of investors ready to invest because this is donation based. However, it requires very, very aggressive bandwidth from you as a business owner to ensure that the raise is successful. The second type, as mentioned, is equity. I'm sorry, I'm having an issue with my with my screen going in and out. Give me 1 second and I will fix it and I will be right back. 1 second.
Well, this is a good time to remind everyone, if you have any questions, please feel free to put them in the question box. We are going to be doing questions at the end. And in addition, I know I've gotten a couple of questions about if this webinar is recorded, will you get a copy of the slides? Yes and yes. We send out a follow-up email the day after the webinar. So for today, since it's Friday, we will send it on Monday and it will have a link to watch it again as well as the slides. Dora, are you back?
I'm back. I'm back. I'm so sorry. I want to make sure that you can see my screen and it was going in and out. So can you see my screen okay?
Yep, we can see your screen and we are on the summary slide.
Great, perfect. Okay, awesome. So back to equity. Yeah, summary of equity crowdfunding. These are typically larger capital needs, so over $1 million. Industry can be consumer or non-consumer facing. When you think about your brand, it can be a local or national brand or both. And when you are raising capital, you would preferably, the business would need to have a tapped in network of folks that are ready to invest in your business. Revenue share. So the capital need is usually under $1 million, both consumer, not both, it's typically consumer facing industries and businesses that have a strong social media following. And then lastly, debt. The capital need is usually under $500,000. The businesses are consumer facing, businesses that have some type of level of community impact and a local brand and strong social media following. So think about what crowdfunding is best for you. You want to ask yourself, are you a consumer facing business? How much capital are you looking to raise? What does your current social media following look like? Do you have some sort of community impact nestled into your marketing or into your model? And do you have a local or national brand? So once you've figured out, okay, I think this is the type of crowdfunding that makes sense for me, then the next step would be to qualify for crowdfunding and how to get your business ready for crowdfunding. So let's check to see if your business is ready to crowdfund. Here's the checklist. In order to crowdfund, you need a thorough business plan, which includes a growth plan, executive summary, and financial projections. So whether you're working with a regulated crowdfunding platform or a non-regulated crowdfunding platform, you still need a business plan so you know what you're using the funds for. I'm going to side note around the regulated crowdfunding platforms for a second and just mention that if you're working with a regulated crowdfunding platform, which is equity, revenue share, or debt, those platforms are regulated through the Security Exchange Commission and FINRA. So before you can actually raise capital with them, with any of those platforms, that you have to be qualified through the Security Exchange Commission and FINRA. So in order to do that, these are also the necessary qualifications to get your stamp of approval through the SEC and FINRA. So business plan, business financials, and a growth strategy. So business tax returns. Obviously, if you're a startup, that's not something that we would need, but to crowdfund through a regulated platform, you would need your business tax returns if you're an existing business. If you're an existing business, you also would need to provide your business financials, which would include up-to-date profit and loss balance sheets and cash flow statements. And then lastly, a clear capital need and understanding of how the capital is going to grow your business. So because you're going out there to the crowd, no matter if you are working with a regulated or non-regulated platform, it is important for you to have a local brand and community impact. So have you been operating for at least 6 months, and do you have a proof of concept? Typically you'd want to have at least 500 or more followers, so it shows that you have some sort of network to tap into, an active website, and then a defined impact to your local community. So what I mean by defined impact to your local community is that you're doing something relative to within the neighborhood that your business is. So it could be anything from providing 1% of your sales to your favorite charitable organization, or it could be that on Thanksgiving you give a meal from your restaurant. It could be pretty much anything. So those are the qualifications to run to qualify and get yourself in a position where you can crowdfund. Now it's how do you actually create your crowdfunding campaign? So creating your crowdfunding campaign, this is a campaign that you're raising capital for at least 30 to 60 days. So to get your campaign ready, you need the following. You need to have a really strong pitch, a 30-second crowdfunding commercial, which is your pitch, and to understand what makes you unique and why people would contribute to your campaign. Understanding what are the different levels of the contributors so you can build momentum with those folks before your campaign even starts. And then at the end, we'll give you some examples of successful campaigns and common mistakes. So if you've ever walked through any type of marketing boot camp or marketing incubator, accelerator, this is the piece where you formalize your 30-second commercial and practice this as much as you can before you launch a crowdfunding campaign. So just to quickly give you a template around a 30-second commercial or pitch, that it would look a little bit like this. This would be what the template would look like. So just to use Honeycomb as an example, you would put in your company. So Honeycomb Credit is for a targeted customer, which would be small business owners, who statement of the need or opportunity would be who are looking to unlock capital. Our product, our crowdfunding model, allows small businesses to grow their businesses and fulfill their dreams, which is the statement of benefit. So you can take this template and perfect your pitch that you would use as messaging over and over and over again during the raise, during your campaign. Second thing to think about is how do you stand out? What makes you unique? This is really critical if you want to launch a successful campaign. And then how to create and tell your story. So thinking about what makes your product, service, or offer stand out. What gap are you filling within within your audience? And then who around you already knows you? So what does that brand look like? All right, so who and where are these people coming from, and who's going to contribute to your crowdfunding campaign? So to talk about this a little bit, there is what's called a buyer persona. And I don't mean a buyer persona on who's going to buy your candle or your soap or hire you as a housekeeper. This is a buyer persona of who is going to donate, contribute, invest in your crowdfunding campaign. So you want to start thinking about who that target group is, and where do they live, and what is the message that you're going to share with them. And the more specific you can get, the better. So this targeted audience, these contributors, they are broken down into pretty much 4 categories. Day 1 supporters, people that are going to contribute to your campaign day 1 before you've seen any success. There's your family and your friends. Those are the folks that are going to contribute when you're about 10% funded. There's your social media and other small businesses and the network that the network that's a little broader, but still knows who you are. That's going to contribute when you're around 50% funded to your campaign. And then lastly, the crowdfunding platform network that you're working with and strangers. Those are folks that will invest, contribute, donate to your campaign at 75% or more funded. So when I say crowdfunding platform network, basically what I mean by that is if you are working with a crowdfunding organization and launching your campaign with them, they're going to have a network of investors, of reoccurring people that have contributed to other campaigns, and those folks will jump on board. Typically, they just don't jump on board until they already seen you be successful. So these are your day one supporters. We call this the level one supporters. These are the people that are going to contribute to your crowdfunding campaign on day one, before they even see any success. These are the people that have inspired you to start your business. Your family and friends. These are your cheerleaders. These are the folks that come into your store day after day. You know them by name. They know you by name. These are local folks in the community that are cheerleading you on and want to see you be successful. Social media followers. This can be any social media platform. So wherever your strongest suit is, whether it's Facebook or Instagram or Twitter, you will be utilizing all of these networks for people to tap in and contribute to your campaign. And then lastly, as I mentioned, there's crowdfunding networks of investors based on the platform that you're working with. And those folks are going to contribute, but they don't contribute until they've seen that you've already been successful and pretty much close to fully successful, which is that 60, 70, 80% funded. So let's put this all together. I know this has been so much in a 30-minute session, and because it is so much, as mentioned, we will share it with everyone. But we've gone through, who or what are all of the crowdfunding options, what are the different types of crowdfunding, how to get qualified for crowdfunding, how to create a strong message, and who is the target audience that you're going after, and now how do we put this all together. So yeah, we've said all of this, and now we haven't even built the campaign yet. So each crowdfunding campaign has a campaign. This is your campaign copy. This is your video. This is your story. This is what you're going to use tangibly to go out and shout from the rooftops why you're raising capital and why people should contribute. So creating your campaign copy, I'm not going to hit this right now, but if you want examples of what a video or campaign copy looks like, you can go straight to Honeycomb Credit /grow, honeycombcredit.com/grow, and see all of the campaigns. And you'll see that with crowdfunding campaigns, you would want to have a video that talks about what your business does, why you're raising capital. You'd also want to include some personal testimony as to why you started your business, some potential testimonies from consumers as to why they work with you, and then a full campaign copy, so a full breakdown of where your business is at now, where you're going, and how the funding is going to be used. Before you launch your campaign, you'll want to think about momentum, how you're going to manage your tasks for marketing outreach. When are you going to post on social media? How many people are you reaching out to that week? What does your messaging look like? Building blasts for emails, scheduling potential events, thinking about building press releases and media outreach for your campaign. All of that needs to be put together before you launch your campaign. So some do's and don'ts. Momentum is the key to the prize when it comes to crowdfunding. it is rolling up your sleeves and going out there and really talking to everyone you can about your campaign. So when I talk to people that are like, man, I want to keep my funding really private, then crowdfunding is definitely not the right fit for you and for your business, because this is a very publicized way for you to grow your business. Okay. So waiting too long to gain momentum, that is a common mistake. The first 48 hours are critical for building up momentum, and the most successful crowdfunding campaigns, they typically have multiple investments or contributions within the first day of your launch. So when thinking about going out there, your first 48 hours, reaching 10 to 20% of your crowdfunding goal within those 2 days is going to tell you pretty much how your campaign is going to go from then out. So if you can do really well out of the gate, that's a really good sign. People's attention spans are short and they will really need reminders. So if you have reached out to someone telling them about your crowdfunding campaign and they have not responded, that's okay. Most people need 3 to 4 reminders before they actually contribute to your campaign. This is a big one, going to social media first. It can be tempting to cast a wide net right out of the gate. However, this can be counterproductive. When a casual observer on social media sees your campaign that's only maybe 2% funded, it's a likelihood they will not contribute. However, if that same person sees your campaign on social media at 40% funded, they'll be more likely to hop on the bandwagon and contribute to your campaign. And then you're ready. You're ready to go launch and shout it from the rooftops. And as a reminder, crowdfunding campaigns to raise capital usually are 30 to 60 days. Now, if you are working with equity crowdfunding platforms, you'd be looking more at 90 days to even up to 6 months, because the dollar raise is so much more. Here are a couple of examples of campaigns, of crowdfunding campaigns. Obviously, I threw in some examples of our clients here at Honeycomb. The first one that I wanted to share with you is a local Cleveland, Ohio catering company that worked with Honeycomb during COVID, actually, when they were looking to scale their business. They were able to raise $30,000 in 30 days to purchase a really cool mobile food trailer that we see now. I live in Cleveland, so I get to see them all over the place in Cleveland at different markets and such. And then we have Rachel with Better World Refill Shop. She is a refill shop, which is a eco-friendly, non-chemical retail store where you can go and get all of your laundry detergents and cleaning detergents and anything non-chemical based. You can go and she's what's called a refillery. So she was opening her second store and worked with us to raise $65,000 from 59 investors. She also hit her crowdfunding goal within 2 weeks. So Rachel is now on to her third store, which is really exciting as well. So lastly, I just want to introduce you to Honeycomb Credit. That is who I represent. I am the director of partnerships for Honeycomb. Our niche and our model is once again loan crowdfunding, and we work with the Main Street small business owner. So here are a couple examples. You see Squash the Beef here again, but we also have Rolling Pepperoni, who raised about $50,000 to open her storefront. A really cool restaurant called Casa Brazil, who raised almost $100,000 for their liquor license. So we don't. Our average raise is anywhere from about $40,000 to $75,000, but as I mentioned, we can raise capital up to about $500,000. Now, What Honeycomb does is we actually are the infrastructure. We are the conductor of the show for you. So we're the crowdfunding experts. So we're the ones that are going to actually put together your crowdfunding campaign for you, which allows for you to just focus on your raise during your campaign. So Honeycomb will build your campaign page for you. We'll come out and shoot your video. We'll file all of the paperwork with the Security Exchange Commission and FINRA. Before you launch your campaign and during your campaign, we put together a customized marketing strategy for you. So when you're out there raising capital, you know exactly what you need to do, and there's no question or winging it type of feel. And then we also handle all of the fulfillment. So we are loan crowdfunding, so you pay back your investors, you pay back Honeycomb, and then we will handle the fulfillment and pay back all of your investors, excuse me, for you. Here's a couple benefits of Honeycomb. During your campaign, you're going to see, massive media exposure. A lot of times this is the first time that businesses are getting that type of media exposure, but during the campaign, usually you see about seven media outlet mentions. You'll see your Google and Yelp reviews go through the roof, because this is not just a raise capital. This is a growth tool for you, and it is a marketing strategy. And then the most important, and what we think is the most powerful, is the average revenue increase for businesses post campaign, post their raise, is 60% revenue increase year over year, which is really powerful. Because you think about it, this is a financial circular economy. You're a small business, you're out there raising capital. The folks that are contributing to your campaign are also patrons, so they're taking that ROI that they're getting, and that return on their investment they're getting, and they're coming right back into your store or online or wherever you sell and spending that money with you, because now they feel a part of their business because they have contributed or invested in your campaign. So that is, I think I can hit escape. And that's the end of my presentation. So I'm going to go ahead and.
Awesome. Thank you, Dora.
Yeah.
We have a lot of questions that have come in, which is fantastic. So we're going to try to get through as many as possible. We have about 17 minutes. We're going to try to do as many as possible. If we don't get to your question, I'm very sorry, but you should definitely follow up with Dora. And before I get to the first question, I did want to say somebody commented that they're actually from the Cleveland area and they're friends with Candace from one of your examples. Yeah, so that's pretty awesome.
Oh, I love that. So cool.
Awesome. Okay, so the first question is, what is the typical cost to launch a successful crowdfunding campaign?
Sure. So typical cost to run a crowdfunding campaign is usually anywhere from 6 to 8% of your raise. So, and I'm saying that as an average for all platforms. So whether you choose equity, debt, revenue share, you'd be looking at paying about 6 to 8% off the top of your raise. So for example, if you raise $25,000, 6% is $1,600. That's what's going to go to the platform that you're working with. Specifically Honeycomb charges 6 to 8% as well.
Awesome, thank you. And then somebody else wanted to know, is a strong social media following based on number of followers or followers interaction with your post?
Yeah, so engagement is more important than how many followers you have. So you could have 60,000 followers, but your engagement is maybe 2 or 3 likes. Or you could have 200 or 300 or 400 followers, but get 20, 30, 40 likes and comments. So it's definitely the engagement.
Awesome. That makes a lot of sense. And then we have someone else who is wondering, like, how often or how much is acceptable to run a campaign? So for example, say they did one last year, is it acceptable to do another one this year? Or what do you kind of say is the protocol on that?
Yeah, so that is that is a great question. And it comes down to, well, let's see. If you're not doing donation based, because once you do donation based, you pretty much have saturated that. You can't go back and do another campaign. Well, you could try, but it's not likely. But with anything other than donation based, you can absolutely utilize crowdfunding as a growth marketing strategy. So you can use this and continue to go back and raise capital. Where you want to be very cautious and where you would work with the folks at the crowdfunding platform you're working with is, are you in a financial situation where you can continue to do that? So if you're raising capital and paying it back in a loan fashion, and you raise 100,000, and then 6 months from there, you want to raise another 100,000, are you in a position where you can pay that back?
Right.
But yes, you can absolutely be successful. Actually, to give you the numbers, when it comes to multiple crowdfunding campaigns, your second and third campaign is even more successful than your first.
That's very interesting. This is another social media related question, but this viewer wants to know if Honeycomb provides social media checklists, help, or resources.
Heck yeah. So so that's the secret sauce with Honeycomb, is that we provide you a crowdfunding coach. So before you even launch your campaign, you're going to have someone dedicated to you building your campaign with you, which is going to include, what does the outreach strategy look like? What do the templates look like? Let's figure out who your 4 level of contributors are going to be. Yeah, there's a lot of work ahead of time before you launch your campaign.
Great. So this viewer said they've actually have received a fair amount of unsolicited emails from Honeycomb before and never paid attention to them because they didn't know who Honeycomb was, and now they've decided that they do. And they were curious of, how do you, find their information to reach out to them? How do you kind of send those emails?
Yeah, well, I'm really glad to hear that our lead nurturing emails are going out and maybe not hitting spam and people are seeing them. But we in-house we have a marketing team that does all of our lead nurturing.
So they just kind of find him online, and as any good campaign does.
Well, I would say the magic to what we think is magical when it comes to Honeycomb is that we have this flywheel that ends up happening, that our alumni that work with us, they help us identify other businesses that would be potentially successful. So a lot of times when it comes to the outreach that we're doing, when we're pre-selecting businesses or looking to work with businesses, it's actually stemming from data from our alumni.
Gotcha. That makes a lot of sense.
Yeah.
And then somebody would like to know, how effective are badges for online crowdfunding?
I'm sorry, can you repeat that?
Yeah, they asked, how effective are badges for online crowdfunding?
I don't know what batches are.
Badges, like BADGES.
Oh, badges.
Sorry.
Yeah. Yeah, the more the merrier. When you get to the point where you're when you're out there on social media, you're going to want to you're going to want to look at, how do you get the most response now, and how can we leverage that to the campaign? So for example, with Rachel at Better World Refill, she did a lot of live videos. And so whenever she would hit a certain milestone on her campaign, she would launch a video about it and talk about it via video. So it's really dependent on how you leverage social media now as to what tangents you want to use.
Great. Yeah, that makes sense. I'm sorry for not pronouncing that well enough. We have another question that says this participant has an active campaign on some different platforms, but they don't have the option to give funders interest. Would you advise against creating campaigns on multiple platforms, or would you advise that they continue this?
I advise that you find the best donation-based crowdfunding platform that fits your business model,
Mhm.
because they specialize in different niches. So find the best. So if you're a woman in service, go talk to I Fund Women, right? So do your research on finding the right donation-based crowdfunding platform, and then Google as much as you can about crowdfunding consulting, and figure out what that marketing campaign should look like for you, and dedicate 20 to 30 hours a week to one campaign on one platform.
Great, that makes sense. And we have somebody kind of wondering how it works with how working with Honeycomb works when you're not based in the same city that Honeycomb is. So this particular viewer is based in Boston. Is it all, virtual working with Honeycomb? Just kind of explain that aspect a little bit.
Yeah. So no matter what crowdfunding platform you work with, everything can be done virtually. So when we say like coming out and shooting a video, every platform has outsourced freelancers that we work with. So you can be, we have business. Our headquarters is actually in Pittsburgh, and we
Mhm.
are launching a campaign in Hawaii next week. So doesn't really matter where you are, we can work with you.
Great. I would imagine that also kind of developed more in this last year and a half with everything going
Yeah,
virtual.
really did.
That's actually all the questions that have come in right now. The last thing was somebody was just curious if you could share the slide with your contact information again, if they'd like to get in contact with you, or if it's not on the slide, how is the best way to get connected with Honeycomb? And actually, as I said, we had no more questions. One more just came in, and I think we do have time for it. So while you go prepare that. Oh, there we go. So do you recommend if
Yeah,
they want to?
my
Yeah,
info isn't here. I can send, I can, do you want me to put it in chat, or do you want to share it with everyone?
yeah, if you could put it in the chat feature, that would be great. Either your email or LinkedIn, however you guys like to have people connect with you.
Sure.
And after you do that, I actually got two more questions, and we still have time, so I'm going to go through them when you're ready.
Yeah, sure. And I'm ready. I'm also just gonna put in our on our website so you guys can check it out.
Awesome. So this viewer wants to know, are you likely to raise more money if you surpass your goal but have days left in your campaign? That's a good question.
I hope I answer it right. I hope I'm getting to what they want. So when it comes to crowdfunding, there is two goals. There's your minimum funding raise goal and your maximum fundraising goal. So your minimum is what you want to minimally get to, and your max is what you're really aiming towards. That's just how crowdfunding works. It's this psychological thing. So once you hit your minimum, if you do not hit your minimum, that means you're not successful, right? So if weeks have gone by and you have not hit your minimum fundraising goal, you're more than likely not to hit your goal, period. But if you hit your minimum goal out of the gate pretty strongly, then you're more likely to hit your maximum goal. So your minimum's 20,000, your maximum's 100. You hit your minimum within that first week, you're more likely to hit that 100,000.
Interesting. That makes a lot of sense. We have one unanswered question, so this is my final call for questions. And in case you're not able to see the chat feature with Dora's email and information, I will include that in the follow-up that we send on Monday as well. So the last question I had right now is, if somebody's looking to start, crowdfunding, and they go to Honeycomb and say Honeycomb is not the best fit for their industry, do you guys make a recommendation of another platform, another resource that might be better for that particular company?
Absolutely. So, we're the experts in our field here. So, so many times I and our team are referring folks over to Kiva
Mhm.
or other platforms that fit the niche that they're in. So if you come to me and you're a big tech company and you're trying to raise a couple $1 million, I'm gonna definitely give you that referral of where to go.
Perfect. That is fantastic to hear. I know we have a lot of different industries in our program from all over, so that is a great resource. So that is all the questions we have right now. So I think we can go ahead and end the presentation a few minutes early. Thank you so much, Dora, for this great presentation. Lots of great questions, a lot of great answers, and I hope our participants are feeling ready if this is the way they'd like to go about and like to start a crowdfunding, campaign. You're going to get a recording on Monday with the slides as well, and I will include that information Dora sent about how to contact them. And then we also will have the recording on our website as well. That will be up in a few days if it's easier for you to go ahead and find it there. We have another webinar next Wednesday, so please feel free to go ahead and register for that. We're very excited as well, and we're continuing to wrap up our webinar year. Dora, thank you so much for this great webinar. I'm getting a lot of positive comments coming in the chat that I'll send to you. And
Oh,
with
thank
that,
you.
yeah, thank you. And that, I'm going to go ahead and end it. I hope everyone has a lovely and safe weekend.
You too. Thanks for joining. Bye.